When the markets see hotter than expected inflation, what the traders believe is, the Fed's going to have to fight harder to win the inflation war. And that means higher for longer, not as many cuts, a tighter Fed. That's good for the dollar. That's bad for gold. They're wrong. What higher than expected inflation means is that the Fed already lost the war on inflation. It's not going to fight harder. In fact, it's going to surrender. Inflation won. It just hasn't admitted that yet. It's still pretending. The Fed is still pretending that it won. It didn't even come close to winning. It's already surrendered. The markets just haven't figured that out yet. But at some point, they're going to realize that that white flag has been waving, and that is bullish for gold. Higher inflation is always bullish for gold.
The precious metals market has experienced significant turbulence as gold prices retreated from their recent highs, dropping $50 to trade at $2,650 per ounce. This decline, highlighted by prominent economist and gold advocate Peter Schiff, comes amid weak inflation data that has sparked debates about the Federal Reserve's upcoming monetary policy decisions. Market analysis from Commerzbank's Carsten Fritsch indicates that gold peaked at $2,725 earlier in the week, before losing momentum during Friday's early American session, settling below $2,660. What makes this movement particularly noteworthy is its apparent disconnection from traditional market indicators, including U.S. dollar movements, bond yields, and interest rate expectations. The relationship between gold prices and inflation presents an interesting paradox in the current market environment. While conventional wisdom suggests that higher inflation should lead to tighter Federal Reserve policies, strengthening the dollar and consequently weakening gold, market participants have already fully priced a 25 basis point rate cut for the upcoming Fed meeting. This dynamic illustrates the complex interplay between inflationary pressures and monetary policy expectations. Schiff's warnings about the direction of the U.S. economy have gained attention. He argues that the Federal Reserve's current approach is exacerbating inflation rather than containing it. His perspective gains credibility from the November Consumer Price Index report, which revealed annual inflation at 2.7%, significantly above the Fed's 2% target. Despite these concerning inflation figures, market sentiment remains tilted toward monetary easing, with the CME Group's Fed Watch tool indicating a 95% probability of a rate cut in the next meeting. Looking ahead to 2025, market observers are increasingly focused on how persistent inflation might constrain the Fed's ability to implement further rate cuts. This concern has contributed to recent dollar strength, creating a complex backdrop for gold prices. Before we dive into this video, don't forget to subscribe to our channel and hit the bell icon so you never miss an update.
We are moving sharply in the wrong direction. Inflation is getting worse as the Fed is pouring gasoline on the fire. Now, there are a lot of people that think, well, because of this inflation, maybe they're not going to cut as much in 2025. That's one of the reasons that you're getting this strength of the dollar. You got a big drop in gold the last few days. Gold's about $50 an ounce lower than it was when I did the podcast on Wednesday. It was at 2,700, basically just below. In fact, it went to 27.17 or so after that. It had a little rally. It almost got, almost got close to new highs. And then these bad inflation numbers clobbered it. And now gold is back to 26.50. But inflation is good for gold. I've been talking about this paradox for years now because the markets don't get it. When the markets see hotter than expected inflation, what the traders believe is, the Fed's going to have to fight harder to win the inflation war. And that means higher for longer, not as many cuts, a tighter Fed. That's good for the dollar. That's bad for gold. They're wrong. What higher than expected inflation means is that the Fed already lost the war on inflation. It's not going to fight harder. In fact, it's going to surrender. Inflation won. It just hasn't admitted that yet. It's still pretending. The Fed is still pretending that it won. It didn't even come close to winning. It's already surrendered. The markets just haven't figured that out yet. But at some point, they're going to realize that that white flag has been waving, and that is bullish for gold. Higher inflation is always bullish for gold, especially when the Fed can't do anything about it. Their hands are tied behind their backs. In fact, before too long, probably during the Trump administration, the Fed is going to have to fess up and say that it's willing to accept higher inflation, that's just the price we have to pay to stimulate the economy, to deal with the debt, to whatever. It's going to come up with an excuse. I don't know if it's going to raise its official target to 3 or whatever it's going to do, but it is going to be cutting rates. It is going to be doing quantitative easing, even as the inflation numbers move further and further north of 2%.
The early years of the Biden administration saw a significant inflationary surge, with 2021 marking the peak rate during his presidency. This upward trend intensified into early 2022, reaching levels unseen since the 1980s. Peter Schiff's analysis attributes this surge to a combination of pandemic disruptions, supply chain failures, and expansionary government spending policies. The inflationary pressures proved structural rather than transitory, fundamentally altering the economic landscape. Recent economic data from November 2024 validate this assessment, showing a 2.7% year-over-year increase in the Consumer Price Index. While this represents a moderation from earlier peaks, essential sectors, including groceries, gasoline, and new vehicles, continue to experience price increases. The persistence of elevated prices, though no longer accelerating, reflects the lasting impact of recent economic policies. These price levels are not merely a temporary deviation, but evidence of fundamental changes in the financial landscape. As Schiff argues, these shifts will continue to influence consumer spending and market behavior, suggesting that inflation's effects on the American economy will remain a significant concern in the years ahead. Let's get back to the interview.
Trump was on Meet the Press. Some of you pointed that out in the comments, and so I thank people for that. But he was on Meet the Press. I already went over the big lie that is getting no coverage in the media, where Trump said that not only was there no inflation when he was president, but inflation was so low, he did such a good job of having no inflation, that Biden enjoyed a ride on his coattails, and that there was no inflation under Biden either for the first year and a half, almost 2 years he was president, which was an outright, well, it may not be a lie because maybe Trump has no idea what inflation was like under Biden. I mean, maybe he's that clueless about what's actually happening in the economy and doesn't really know anything about inflation or economics. And so it's not a lie if you think it's true, because nobody's ever pointed out the facts. I mean, I have no idea which one it is. But I pointed out that the highest year of inflation under the Biden administration was 2021, his very first year. It was like 7.5%. The second worst year was the second year. So during the 2 years when Trump said we had hardly any inflation or no inflation, we had the worst inflation. But I want to dissect it a little bit more to show you how the trends built up, because inflation works with a lag. So if we had a lot of inflation in 2021, the seeds were sown in 2020 or earlier when Trump was the president. Now, we had massive deficit spending under Trump. We had massive money printing under Trump, and the effects of that manifested under Biden. Now, Biden made it worse. And in fact, a lot of the Biden inflation is going to show up on Trump's term, right? That's going to, when inflation really skyrockets next year, that's not Trump's fault. It'll be his fault later on. But, he's inheriting an inflation problem from Biden, just like Biden inherited an inflation problem from him, right? But he's trying to sell the country on the lie that we had no inflation when he was president. And now that we've reelected him, it'll disappear again and we'll have no inflation. That is completely wrong. So if you look at the last 2 years of Trump's term, which was December of 2020 and January of 2021. I mean, he left office on the 20th of January. So I'm going to give Trump the January and December numbers. The CPI rose by 0.4 in December and 0.3 in January. Annualize that, that's 5% inflation during his last 2 months in office. That 5% annualized rate of inflation is higher than the whole year inflation for 2023 and 2024, right? The years that Trump says we had high inflation, those are the 2 years that it was lower than it was when he left. If you want to take a few more months, because Biden didn't do anything until the big stimulus package was passed on like March 20th or something, or March 15th. I forget the exact date. They passed the stimulus.
Gold continues to serve as a key asset amid economic uncertainty, with its price driven by rising demand, central bank actions, and market dynamics. As inflationary pressures persist and the global financial landscape remains volatile, gold's role as a store of value becomes increasingly important. With growing geopolitical tensions and shifts in the international monetary system, Gold is poised to maintain its relevance, potentially reaching new heights as it benefits from the revaluation process and changing market fundamentals. What do you think the future holds for gold prices? Share your thoughts in the comments below. If you found this analysis insightful, don't forget to like, subscribe, and hit the bell icon for more updates. Thanks for watching.